Good morning. Welcome to Trading Hour. I am Reema Tendulkar. With me are Sonia Shenoy and Pavitra Pari. Good morning, girls. It's picking up, right, for a market. Very flat start. We opened at that 18,400, but in the last few minutes, the markets have picked up. We have fresh 52-week highs on the Nifty. The Nifty Bank is at a record high level. The Sensex, as you can see, is now just 250 points away from its record high level, which is 62,245. So 62,245 is the level that we're watching, 250 points away from that. If we get to that, then we will be at all-time high levels on the Sensex. Very slowly, we've been creeping higher and higher. And today, as I said, after a flat start, things are picking up. That was a price action even in yesterday's trade. So yesterday, the markets were flat. We just traded in about a 100-point trading range. But in the last 30 minutes, things picked up substantially. And by the end of it, we had more than a 100-point gain on the Nifty. So it's looking optimistic. Let's say that, right?
It's very exciting. I mean, I don't know about you girls, but I'm excited because, these are moments, these are milestones, and you get to sort of witness them as they happen, right? Record highs, as you said. It's just a matter of time before they come through. And it reminds me of the comments that Jonathan Garner was making a while back, where he said that India's demographic is so strong. It has one of the youngest population in the world, and consumption is coming back in a big way. So I think India is going to benefit from that. The only fly in the ointment perhaps is the fact that the valuations in India are now the richest compared to historical valuations. So that is a little bit of an issue. But other than that, he was even comparing, markets like Korea, Taiwan, and he said that financials in India are doing so well, even not just compared to their own past, but compared to other markets. So I guess India is standing tall.
Oh, absolutely. In fact, even when we had CLSA earlier this morning, they were also saying, right, 21,000 on the Nifty is what they see by Q1 of 2023. So things are definitely looking up, but it looks like our patience is really being tested while we do get to those levels. For today, what's really shining out is some of the other Asian markets. So take a look at what's going on in Hong Kong, in Taiwan. Those markets are doing all right, this is for today. Take a look at what's happened for the past month. So you have Hang Seng, which is up around 23%. Taiwan is up around 12%. Nifty in the same period is just up around 2%. So there's been a significant outperformance from the Asian markets this month. Of course, this is after, they did see quite a downtick earlier as well. Seems like the PSU Bank rally is not over at all, because a lot of the smaller ones are just flying away today. So the likes of Union Bank, South Indian Bank, these ones clocking in gains of around 6%. You have some of the bigger IT names which are doing well. And on the downside, it is really some of the metal names which are finding themselves there. So Hindalco, Tata Steel, JSW Steel, a few of those. But that's what's happening with the market. Let's quickly run you through everything that we have lined up for you on the show today. The Nifty and Sensex gain after a flat opening. Sensex is in fact near its all-time high and approaching the 62,000 mark. Advances comfortably outnumber declines. PSU banks and IT lead. The mid-caps lag today.
And we will be joined by the management of Paras Defence to discuss their second quarter earnings, what they foresee for the business going forward. So do stay tuned in for that.
And on the sidelines of the Morgan Stanley 21st Annual Asia Pacific Summit, we will be joined by Sumit Kariwala of Morgan Stanley for an interesting conversation on the financials later on the show.
Finally, Apollo Tyres and TCNS Clothing are buzzing on the back of some news flow. All the details lined up on the show, all this and much more in the next 60 minutes.
But first up, let's invite Rohit Srivastava of IndiaCharts.com on the show now. Rohit, on the cusp of hitting those all-time high levels on the Nifty and the Sensex, we've been waiting for it for a while now, and it looks like finally we could be getting there very, very soon. Your thoughts on the market setup and how we are positioned?
So my sense is that, this rally is getting to the point where it's a little fatigued. The reason I say that is that we are seeing a slight loss in volume. Specifically, if we look at the Nifty 1-month futures market for the last 2 days, volumes are down to almost around 56 lakh shares traded, which is the lowest, I think, since September. We're also not seeing participation from the broad market in general. So if you look at the mid and small cap indices, they are really not making new highs. Compared to even the highs that we made in September. The Nifty's gone past that. Bank Nifty's made a new all-time high in between, but the mid and small cap indices are remaining way behind the curve as far as the market is concerned. So my sense is whatever started at the beginning of October, we thought it was a bear market rally in terms of the short positioning that had been built up at that point of time. Most of those got covered in the month of October. In November, what we've seen is an extension of that rally. And I think the short squeeze is definitely over. We are seeing continued momentum on some liquidity that is still there, but the momentum is really slowing down. Like I said, when we look at the trading volumes and the participation of stocks across the board, and so that's my near-term concern. I think there's room for a correction to really kick in, and we'll try to judge the size and scale of that. But right now, we really want to be booking gains wherever possible and taking a step back from the market.
So when you say there's room for correction, Rohit, good morning. What would your view be on the downside? Because we were speaking to Lawrence Belanco of CLSA, and he mentioned that the base or the floor for this market has moved higher now to around 16,000. Do you feel the same? And what could the extent of the correction be, if at all?
So I'm trying to keep it open because if I put a limit to the downside, it might even limit what changes are going to happen in the global environment. Because so much that we are so focused on things like inflation numbers for a particular month. The data analysis shows that the inflation data could really remain stickier, which means the Fed on course will have raised rates and then kept them higher for a period of time. And that can mean that US earnings really slow down quite a bit. Now, unless that narrative really changes, I'd want to be open to whatever downside risk that is, which is we have to judge between, say, the 20-month average, which could be 15,500. So that's sort of close to 16,000. But that's in the big picture. In the near term, what really ended up happening in October is we took support on the 20-week average at 16,800. That may move up to closer to 17,000. So that's the first level we'll really look at for support in any kind of sell-off. In the shorter term, we'll also look at around, I think 17,500 is going to be a support on daily charts. So I'll go level by level. We'll look at whether 17,500 holds, then we'll look at whether that breaks, then do we go to 17,000. But having said that, the upside is going to slowly get capped, and that's, I think, more important in terms of what action we really need to take at this point of time, and being a little careful, because we can get carried away. Which is somewhat what you see in the index futures. Like if you just look at the premiums over the last couple of days, 50 to 70 points in the current month, and December month yesterday quoted at one point almost 175 points higher than spot for December futures, which is pretty high. It shows that people are willing to pay a high premium to hold on to their long positions, which is sort of complacency in my sense, and we'd really not want people to be complacent at this point of time.
All right. By the way, the Nifty Bank is at a fresh high. That one is up significantly right now. It's 0.3% higher. Their new high made on the Nifty Bank, 42,515 is what we have there, led by the likes of Kotak Bank, which is the top gainer on the Nifty. Also have strength coming through from ICICI Bank. HDFC Bank, by the way, this month has done very well. It's up around 8% for the month alone. Rohit, thanks for joining us. This is Pavitra. What do you make of the Nifty Bank move? And also, if you could take us through specifically what's going on in the PSU banks, do you think that with this kind of up move that we've already seen, a lot of it is already in, and maybe it could be quiet from here on, or do you think there's room for lots more over here as well?
So very short term, I think the upper band for the bank Nifty is at around 42,600. If it does push beyond that, then maybe around 42,800. So those are going to be the upper levels we look at in the near term. But looking at some point, the bank Nifty also cooling off and pulling back, like I said, for the Nifty. In the short term, if I had to put a support level, I would say somewhere around 40,600 is the support, as in when a correction kicks in for the short term. If that breaks, then we look at lower levels. So these would be the immediate levels on the up and down side. Now, asking about PSU banks, I do think we are at the fag end of at least the current move, and the reason is that we are seeing explosive volumes in the sector. So if I just pull up the Nifty PSU bank index and look at the volumes of the PSU bank index, they're very, very similar to last couple of peaks that occurred in the index itself from where they corrected. And so when you see that level of enthusiasm in volumes being traded every day, I think you're closer to the end of this move. We would probably like to see a pullback before we consider entries again for the sector.
How long do you think this impending correction in the market could last, Rohit? Because typically towards the year end, we all anticipate that Santa Claus rally. Should we dismiss the possibility of an up move towards the end of this calendar year?
So what I look for is something more immediate, which means, see, we are in November, say we are 16. So even if I give it 4 weeks, it's possible that, the rally you're talking about in terms of a Santa Claus rally could kick in sometime later in December. But it's not necessary. If we just go back 1 year, last year, we actually saw a sell-off in Indian markets all through December. So I'm not betting on that possibility. We'll really want to see this pullback develop before we really take a call whether there's going to be a year-end rally or not.
All right, got that, Rohit. But on that note, we're going to leave it today. Thank you very much for joining us and taking us through your call on the market and where we could be headed in the near term. With that, it's time for a short break on the show. But when we come back, we're going to shift focus to the world of commodities. Manisha Gupta will join us to bring us up to speed.
Countdown to the world's most prestigious accountancy professional event has begun. The 21st World Congress of Accountants is being organized from 18th to 21st November 2022 at Geo World Center, Mumbai, hosted by one of the largest accountancy bodies in the world, the Institute of Chartered Accountants of India. For the first time in 118 years, over 150 speakers, more than 6,000 delegates from over 100 countries on a single platform. Witness this mega conference. For details, visit icai.org.
अरे भाभी जी बड़े दिन बाद
मुझे बेस्ट डायमंड ज्वेलरी दिखाओ।
ये एक्सचेंज करा लो।
बेटा एक्सचेंज में ज्यादा
नहीं, सिर्फ 5% कटेगा।
वाह!
पेश है 95% एक्सचेंज वैल्यू और 90% बाय बैक भी। किसना डायमंड ज्वेलरी?
बात सिर्फ मेरी नहीं, देश की थी। माइनस डिग्री में भी कॉन्फिडेंस प्लस में रहता था। वो जज्बा आज भी बरकरार है, सही मूव लेने के लिए, क्योंकि अब बात सिर्फ मेरी है।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू।
आज ध्रुव के स्कूल से फोन आया, कहने लगे कि फीस भरो वरना कल से स्कूल आना बंद। क्या कहती हूँ कि बाप की गैर जिम्मेदारी की सजा बेटे को मत दो। तुम तो टर्म लाइफ इंश्योरेंस लिए बिना ही चले गए।
PolicyBazaar.com पे 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 430 रुपए महीने से शुरू।
I like it. Play it your way. Sarah, this is your space.
Play it your way.
Choose a better route and aim to stay ahead with HDFC Business Cycle Fund. NFO closes 25th November 2022. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. You're still tuned into Trading Hour on CNBC TV18, and let's talk about the commodity space now. Manisha joins us, and today she's talking about gold, which it seems like is getting even more expensive. Hi, Manisha.
It sure is. Actually, it's trading at a 3-month high in the global markets and the Indian markets as well, where we have seen it cross above 53,000 rupees per 10 grams now. Last time you saw that price was in August, and 53,600 actually is the high of this year until now, and gold really seems to be inching up towards those levels there. When you look at the comparison on how the gold has performed in dollar and the rupee terms, there you have it on your screens. While the Indian markets have seen a 9% of gain in gold prices in this year until now, in dollar terms it has been a loss of around 3%. Ditto is the case with silver, which has declined nearly 7% in dollar terms. In the Indian markets, though, it is down by 1%. So a lot of cushioning happening in the Indian markets, and that's because of the rupee depreciation. That clearly is all about the currency play there. But the safe haven investment buying seems to be coming back in case of gold. As you look at the US inflation cooling off slightly, there's now an 85% chance that the rate hike in the month of December would be at 50 basis points. Clearly is a lot of strong sentiment that we have seen come in for the precious metal prices there. Also strong physical buying in the Indian markets because of the wedding season here. International markets also are looking at strong physical buying in sense of investment, ETFs, and also ahead of festivals there, that is Christmas and New Year. Markets also have seen very strong buying for gold coming from the global central banks itself. positive. The last quarter was the best year in 55 years that you saw global central banks invest in gold. So everywhere that you look, there are positive cues coming in.
Absolutely. And there's a big fat Indian weddings are back, right? I mean, India is all set to witness its biggest ever wedding season this time around. There are over 32 lakh weddings till February. That's going to be a blitzkrieg of weddings. And of course, gold prices perhaps may inch up higher because of the demand there. We'll slip into a quick break. Thanks, Manisha, for joining in. We'll get to the market technicals. Mitesh Thakkar of earningwaves.com will join in. He'll give us some stock trading there. Welcome back. Thanks for staying with us on Trading Hour. There's some stock-specific action happening in a rather quiet market. So let's get straight to that. MSCI updates on the treatment of L&T Infotech and Mindtree stocks post their merger is what Vivek is going to talk about. He joins in now with all the details. Vivek, over to you.
Well, that's right. So post the merger record date announcement of LTI as well as Mindtree. Now, the record date is on November 24th. What analysts were waiting for was how the passive index manager, that is MSCI, would actually do the adjustment in terms of both LTI as well as Mindtree. So yesterday, MSCI has given an update to the members. So what they are actually doing is that MSCI will now be deleting Mindtree from the indices on 22nd of November, and MSCI will simultaneously go ahead and increase the weightage of LTI on the same day. So it's a largely net neutral event. So most of the flows that will be coming into LTI will be offset by the outflows that will be coming out of Mindtree. The event will happen during the trading session of 22nd November, and it'll be an interesting one to watch on the back of the fact that there'll be inflow coming into LTI and outflow coming out from Mindtree. So important development in terms of the treatment of the merged entity.
Thank you very much for that. Let's talk a bit about Apollo Tyres. Yesterday, the stock was higher in trade as they reported an improvement in margins on a sequential basis. The European operations too were looking up and showing signs of a recovery. But today, Sonia, the stock is turned. It slipped 5%.
So, the stock is at a fresh 52-week high yesterday. So maybe there's some profit taking today. But I reckon that also the reason why the stock is under pressure is because in the conference call, the management spoke about their higher debt. So maybe that's a bit of a concern. But apart from that, the conference call commentary was very strong. They said that there's a revenue growth guidance of 20% for the standalone business, which is the India business. India business is doing very well because of the recovery that we're seeing in demand. There's sustained growth in the OEM replacement segment. There's a pickup in the commercial vehicle replacement demand as well. And they have undertaken a lot of price hikes to pass on raw material costs. So there's a 5% price hike in the replacement segment in India. There's a 5 to 12% price hike in the passenger car and the truck and bus radial segment that they have already undertaken. But as I said earlier, the stock is under pressure because of the rising debt, and it's not a small amount. The debt, the consolidated debt has risen to 5,500 crores as of Q2. This compares to 4,700 crores, in FY22. So rising debt is a concern, and of course the stock was at a 52-week high. So perhaps some profit taking is what we're seeing over there.
All right, that is on Apollo Tyres. Sonia, thanks for that. The other stock that we're tracking today is TCNS Clothing. This one is surging in trade after reports suggest that multiple companies are looking at the promoter stake. So Mangalam is here to fill us in with the details. Mangalam.
Well, that's correct. So TCNS is buzzing on the back of news reports which suggest that maybe the promoter stake of the company is up for grabs, and there are a lot of takers for that. Reports suggest that the suitors would be Reliance Retail, there's Nykaa which is looking at it, Aditya Birla Fashion Retail, and even Trent have shown interest in buying TA Associates, 29.24% stake in the company. TA Associates, as we know, is a private equity firm which is also the promoter of TCNS Clothing. Reports also suggest that not just these companies, we have a couple of PEs showing interest as well, TPG Capital, as well as the likes of Advent. TCNS Clothing, of course, as we know it, as the owner of women's wear brands like W as well as Aurelia. CNBC-TV18 had broken the story back in August itself. Nisha had alluded to it, that TCNS Clothing is on the block, or the promoter's stake is on the block. And now this seems to be a follow-up story on that one. And the fact that now the names are mentioned and the number of suitors are mentioned, the stock is seeing some traction.
And this perhaps would also entail an open offer if this, stake sale goes through. Thank you very much for that, Mangalam. Let's get into a break. When we return, we'll be joined by the management of Paris Defence to discuss the company's second quarter earnings. Stay tuned.
countdown to the world's most prestigious accountancy professional event has begun. The 21st World Congress of Accountants is being organized from 18th to 21st November 2022 at Geo World Center, Mumbai, hosted by one of the largest accountancy bodies in the world, the Institute of Chartered Accountants of India, for the first time in 118 years. Over 150 speakers, more than 6,000 delegates from over 100 countries on a single platform. Witness this mega conference. For details, visit icai.org.
इस सुपरफास्ट जमाने में कार इंश्योरेंस क्लेम का स्ट्रेस क्यों? एक्को ऐप पे क्लेम सेटलमेंट सुपरफास्ट होता है।
Get super fast claim settlement. Acko, welcome change.
Can someone working alone solve all the world's biggest challenges? Isn't collaboration the way we'll bring clean water to the world's megacities? And produce enough food for a growing population? At SABIC, we believe the chemistry between people is the chemistry that matters. SABIC.
To make my vision a reality, I have to see clearly from every point of view. With my Verilux progressive lenses, I seamlessly transition from near to far and see every detail in sharp focus. When you see no limits, there are no limits. Verilux lenses by Essilor.
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
Okay, welcome back to Trading Hour. Just wanted to point out a couple of stocks that are really moving around. So if you think the headline index is absolutely flat, there are stocks which are doing very well. Global Health, by the way, Medanta, the new listing is now up 23%. So it's really the big bang listing of the day. Great track record, strong promoter name, good fundamentals, and valuations have some upside. It's cheaper than peers. So the new listing is doing very well. And so is Bikaji, by the way, 10% higher. Campus Activewear, Castrol India, Karur Vysya, UCO Bank are a couple of other names. So Mitesh Thakkar is joining in to tell us how to approach all of these names. Mitesh, I wanted your thoughts on some of these banks. So, you know, in the PSU banking space, things are picking up yet again, UCO, Union. Is there still some headroom left here? And if yes, what would your pick be?
Good morning again, Sonia. I think, you know, what happened is that this PSU banks, the entire space had gone into a strong outperformance versus the markets plus the private sector banks. Last 2-3 days, we saw some kind of pullback profit booking happening, but I think the trend is clearly and firmly on the upside. So I would believe, yes, there's more upside left. For example, on a chart of Union Bank, if I was to look at, I think the targets are closer to about 77 to about 78 to begin with, and maybe even higher levels eventually. So quite a positive setup over there. Similarly, if you also look at the charts of Bank of Baroda, I think that's a stock which for the last 4-5 days has been sideways. I think the stock, once it starts getting past 167, 168, then I think the stock can easily do about 180 to about 185 on the upside. So I would stay positive. I think that's the space which will keep its outperformance and still see some price gains as well.
Okay, thank you very much for that. Before we let you go, what about the individual stocks that you're recommending?
Yeah, I have in fact a banking name, though not the PSU ones. Kotak Bank is something which has done very well and is breaking out. That's a buy with a stop below 1940 for targets of 1995. And JK Cement is also a stock which is making a fresh swing high. So that's a buy with a stop below levels of 2940 for targets of around 3,100.
All right, got that. Mitesh, thanks a lot for joining us with that quick technical check. But let's talk about some corporates now. Paras Defense is on our radar after they saw a subdued second quarter. Revenue grew just around 12%. Profit, EBITDA were completely flat this quarter, and the margin also has been under a bit of pressure. All of this I'm comparing to the kind of levels that we saw last year. To discuss the quarter gone by as well as the road ahead for the business and the company, we're joined by Amit Mahajan, who's Director, Technical and R&D at the company on the show now. Amit, good morning and thanks a lot for joining us. This is Pavitra. I want to begin by asking you about what's happening in the heavy engineering side of the business, because I'm seeing that segment is where you're seeing a bunch of the weakness come through. It also contributes significantly to your revenues. So if you could tell us what that weakness is on account of and how do you see a trend in the coming few quarters?
Good morning, Pavitra. Firstly, thank you for having me on the show. There are no concerns on the heavy engineering side because although the revenues can dip, but heavy engineering also contributes to the other verticals like electronics, as well as now has started doing on the optics. So it is definitely contributing, but then it does not show on the revenues. So there is definitely a lot of significant influence of the heavy engineering on our total revenues.
Amit, morning. Rima here. You know, when we last spoke to you, you indicated that FY23 margins could be closer to 30%. Currently, you're tracking
Correct.
lower than that. Do you think you can get back to 30% margins for the full year, or and what's the outlook looking for the second half of the year?
I first want to thank you for this question, but I want to tell you that, see, we are a defense company, defense and space, which is a very, very strategic and a niche domain, and we are a project-oriented company. So no one particular quarter is an indication of how the whole financial year is going to go. We are very satisfied with the result that we have, and we are on song, or we are in line with what we are going to achieve at the end of the year, which is definitely a good growth from the last year.
So when you say good growth, can you share some numbers with us, what the ballpark growth could be by the end of the year? Because Q2 was a bit subdued.
I don't want to give you exact growth,
Sure.
but they will be in excess of 40 to 50%.
Okay.
So you be rest assured that we are in line with what we want to achieve. Yes, the quarter on quarter is not a right reflection of how the business is panning out.
So 40 to 50% you're saying compared to FY22, right?
Yes.
Okay. Okay. The reason I ask is because a lot of your revenues comes from government contracts, defense, public sector undertakings. Are you noticing any delays as far as receivables are concerned?
See, sometimes what happens is when you're doing projects and in certain quarters, the payments don't come in quarter-wise, right? So they are a project payment. There are some other companies are also collaborating for doing those projects. Some receivables which were slated for Q2 have already started coming in, and they will come in Q3. But this is absolutely normal. There is nothing as a cause of concern.
All right, got that. Amit, can you take us through what the order book stands at right now? And also, if you can tell us what part of that order book do you see getting executed in the next year?
So the order book, there are very good news when it comes to order book, or for that matter, coming opportunities that we have. The order book, which includes the orders on hand, L1 and nominated, they all put together, we are in excess of 600 crores, which is again, from the last time we spoke, it is a good increase. At the same time, the funnel that we see, that the opportunities which are very, very strong and almost slated for us are in absolute maybe 2 times than what order book is. So which is a good landscape for a company like us. Moving forward, we have a clear roadmap as to what is going to happen in the next 2 to 3 years. And we are working very, very hard to make sure that we grab all the opportunities that are coming our way.
I think the last time we spoke, your order book was about 550 crore, which was in August. So since then, it has seen a pickup to about 600 crores. And at that time, you had given us an indication that the drone subsidiary will start contributing heavily FY24 onwards. Amit, wanted to get your sense in, is the company in the next 2 to 3 years looking at some sort of a partnership with an MNC company? A couple of months back, there was this big news about how Lockheed Martin tied up with the Tata Group to manufacture. And that's got a lot of people excited that, this whole Make in India defense could get a push even when you have these tie-ups with MNCs. Is that the track Paris Defense could be looking at taking?
So we do not want to say that we are not looking at something like this, but we don't have any proposals on the table. But it is very, very good for industries if the big companies, they tie up and they partner with smaller companies like us. And I think overall, the technology inflow and the execution and cutting edge technologies for the country, all of this, the landscape will change if there is a tie-up with big companies. We are right now having no proposals on the table, but we are open for any such proposals if they ever arrive.
Okay, we'll leave it at that, Amit. Thanks a lot for joining in, and all the best for to achieve your revenue growth target. It's an ambitious target, 40 to 50% compared to last year. An order book of 600 crores is what the company is sitting on currently. That's Paris Defense.
Margins, right? Right, because he had indicated that margins would be 30%, and I think right now for the first half he's closer to 26%. And when we asked him, are you going to get there? He said, we'll just see good growth.
I think it's with most of these companies, right? Manufacturing,
predict, right?
It's hard to predict given the way commodity prices, fuel prices, costs have gone up. It's a challenging time for them. Let's take a quick break. On the other side, we will have Sumit Kariwala of Morgan Stanley to discuss more on the space that has been hot and buzzing, banking. This is from the sidelines of the Morgan Stanley 21st.
Welcome back. The countdown to the top. The Sensex, as you can see, is just 225 points away from its all-time high levels. The Nifty would be away by just 170 points. They're about the all-time high level on the Nifty is 18,600. So we're very close. We're almost there, just not quite. And Rohit was indicating that markets are seeing some signs of fatigue as we are trying to make that cross that final hurdle. But for now, as we speak, it's pretty flat on the benchmark indices. Minor gains seen on the Nifty and the Sensex. The mid-caps are trailing the frontliners. A couple of stocks which are moving up. These rail stocks continue to do well. Cetex Rail is up 9%. Ircon has rallied 9.5% today, taking its month-to-date rally to 37.5%. So that's clearly a big mover. Sugar stocks are up and about in trade. So Dhampur Sugar is higher. Union Bank, South Indian Bank in the banking pack, in the mid-cap banking pack, are gaining ground. Paytm is struggling, so that's down 3.5%. Nykaa has lost 15% in the last 2 days. The bonus shares have been credited, so that's adding to a bit of a supply pressure. And we said tire stocks have taken a breather, not just Apollo Tires, but JK Tire too is down 2.5%. But as promised, let's turn our attention to the banking and the financial space now and invite Sumit Kariwala, the ED Financial Equity Research, who's joining us from the sidelines of the Morgan Stanley 21st Annual Asia Pacific Summit. Sumit, morning, and this is Rima here. Thank you very much for joining in. Now, banks have seen a re-rating across the board, but you believe we could see a second leg of re-rating. Can you take us through your thesis?
Yeah, hi Rima. Thanks for having me on the show. So yeah, you got it right. What we've been calling for in banks is the second leg of re-rating cycle. Typically what we have seen is that when banks come out of recession or slowdown, they re-rate in two legs. The first leg is driven by asset quality turnaround, which has played quite a bit. There are still some banks which need to re-rate, but a lot of that is done. The next leg of re-rating will be about revenue growth, and banks can deliver that, will take part and re-rate further. Revenue growth will be a function of two things. One is loan growth acceleration, which we've already seen, and I think so there are more legs to come. Even on margins, we've been quite surprised so far, and I think so a significant part of the margin expansion that we have seen is something that banks will be able to retain over the next 2 years.
Okay. Good morning, Sumit, and thanks for joining in. You know, in your report, you write that you're scanning for stocks that are not fully pricing in a growth upcycle. And just wanted to mention some of your top ideas. There's ICICI Bank, Axis, Bank of Baroda, and SBI. But don't you think it's a bit of a crowded trade now? I mean, SBI has gained over 30% this year already. Have investors missed the bus on these names, or do you think that this is just a start of a structural upcycle?
Yeah, hi. I would say this is start of a structural upcycle. If you look at stock performances of the last 1 year, it might be misleading because some of these stocks have not done well for the past 5-10 years. I think so what's happening in India is that over the last 10 years, we've been just moving from one crisis to another. We had a corporate NPL cycle. This was followed by demonetization, GST, NBFC crisis, and then COVID-1, COVID-2. In our view, Indian banks, through these cycles, have provided aggressively, particularly in recent years. And if I look at the balance sheet, be it government, be it private sector, be it financial sector, the balance sheets are so good, and I've never seen such kind of balance sheets for years now. From here, until we have a sharp economic global slowdown, I think so there'll be a very sustained pickup in loan growth. And that is something which is not going to be for one or 2 years. It should be like for, say, 3 to 5 years. The balance sheets are squeaky clean. So even a slightly slower global backdrop will mean that Indian banks can actually do very well.
All right, got that. Sumit, thanks for joining us. This is Pavitra. So, you know, you are saying that the re-rating cycle, the second leg of the re-rating cycle will be aided in large part by the kind of loan growth that will come through, right? So, I want to ask you, what is the kind of loan growth that you're picturing, you know, for the entire industry, say in the next year? And what banks do you think are well positioned in that space to sort of really benefit from this?
Yeah, that's a good question. So if I look at loan growth over the last 6 months, it has accelerated from 9% to 18%, quite to our surprise. Now, if you look at the drivers to that, part of this is driven by base effect because same time last year we were going through the after effects of second COVID wave. What's going to happen going forward is that we're going to see a corporate capex cycle pick up. We're seeing the green shoots of that. There's always been demand, but the big benefit that we have now is that the supply side is in place. As I told you, banks' balance sheet, corporate balance sheets are very, very good. And that's going to mean that over the next 1-2 quarters, even if loan growth slows down from 18% to say 14-15%, we're going to see re-acceleration to 16-17%. If I look at the past 10-12 years, and if I had to select stocks in India, what I used to look at is balance sheet, asset quality, who's not sitting on corporate NPLs, who has the capital to grow. The next 3 years are going to be very different. If there's one metric which I want to see over the next 3 years, and the banks which will be able to capitalize on growth, therefore, that'll be deposit growth. I think so retail deposit competitive intensity will pick up quite meaningfully, and banks that can gain market share in retail deposits without paying up will actually be able to deliver much better revenue growth as well as re-rating.
Talking about trying to garner the deposits and being competitive, that would imply the deposit rates would start going up from here on, and we've already started seeing that. And generally, deposit rate increases lag the lending rates. So if we've now started to see deposit rates rising, will it not pressure the NIMs? Because I think at the onset you said that you expect the NIMs to sustain at these levels. So what makes you so confident that NIMs will hold and not decline as deposit rates increase?
Yeah, that's a very fair question. See, if I look at retail deposit rates, they've gone up over the last 6 to 9 months, but bulk of the increase actually happened a month back when SBI took up deposit rates by 60 to 80 basis points. I think so deposit rates will have to go up further. If I look at the spread of retail deposit rates to say repo, the spread has actually declined. So I would say deposit rates will go up further. What is going to happen is that the lead lag that we are seeing with respect to margin expansion is going to continue. Over the next 2 quarters, banks will gain on margins further. What's going to happen is the full impact of deposit rate hike will come in fiscal 24. And whatever we gain over the next 2 quarters is what we're going to give back over a 1.5 year period. So there'll be some lead lag, but structurally, whenever interest rates rise, banks benefit on margins because current account, savings account deposits, they don't reprice upwards. Interest rates are moving up because growth is looking better, and that also means that banks will cut down on risk aversion and grow the unsecured and higher margin segments faster. So the loan mix diversification also helps on margin. So I would say a lot of margin expansion that we've seen is something that banks will retain. There'll be lead lag, but 2 years down the line, the margins will be higher than what they were 2 quarters back.
Okay, what about valuations? I was going through your own valuation table, and for something like an SBI, it's still trading at a little over 1 time FY24 price to book. Of course, it is the most expensive in the PSU banking space for a reason. But do you see more valuation headroom now, especially for PSU banks?
So I would say let's think about valuations through a cycle. Okay, when banks are not doing well, when we are in a recession, slowdown, valuations will be below long-term averages. When the cycle is okay, we see valuations come closer to long-term averages. Valuations actually move higher than long-term averages when loan growth comes back, and that's the time when valuations do very well. My view is that for a lot of these banks, valuations are still below long-term averages or around long-term averages. So valuations, I would say, if loan growth is coming back, will actually surprise to the upside.
Right, that is on valuation. Sumit, another question I want to ask you is on how do you look at the slightly smaller banks, the mid-sized banks? Are you as optimistic on growth for these banks as well? I mean, I know you like Federal, but take us through the kind of growth that you're penciling in for the smaller banks.
Yeah, so I would say that if I look at the last 10-12 years, the smaller banks did very well. That was because the competitive intensity was rather benign because some of the large banks were going through corporate asset quality cycle and so on. This cycle will be good for the small banks, but it may not be as great as it was for the last 10 years because the competitive intensity both on retail deposits as well as retail assets will be significantly higher. There are small banks which can do well. Some of the banks which have very good underwriting capabilities, who can actually take more risk and deliver risk-adjusted credit costs. Some of these banks will do very well. I don't want to get into stocks, but yes, we'll have to be more stock selective rather than buy the basket.
And just one final word, Sumit, as you speak to a lot of investors at your annual Asia Pacific Summit, what is the feedback when it comes to Indian banks? Are they as optimistic as you are? Are they willing to buy at these levels? Because we've already seen one leg of re-rating and a significant share price gain. Are they comfortable with the risk reward at these levels?
I think so. As I talk to investors, I see more and more investors understanding that this is not a 1 year, 2 year story. This is more like a 3 to 5 year story. Yes, they know that valuations have done well, and they don't look at valuations only relative to India. They look at valuations as compared to what's happening globally, and in that context, valuations will not look that attractive. So I think there's a lot of interest. A lot of people want to buy on this, and as they see more conviction around loan growth sustaining, you would see more flows into India for sure.
Okay, Sumit, have a great conference. It's sounding a bit noisy out there, so we're going to let you go back to it. But thanks for joining us and giving us an update. That's Morgan Stanley, very bullish on the banking space, saying that there's more valuation headroom as well. Let's slip into a short break. But before that, listen into some important market opinion. We spoke to Ajay Srivastava of Dimensions Corporate Finance Services. He said it's time to be a bit cautious on the markets. Take a look.
My sincere advice to everybody would be, markets are good high. This is a good time to take money off the table and go spend it on yourself. You know, investing in this market at these prices, valuations, you could be in for a big disappointment compared to many other sectors you want to invest. So if you want to invest, perhaps I would not recommend equity. You know, strange coming from me at this point of time, equity investment. Look at a 12-month horizon. You will never make returns to beat the debt returns at this point of time. You'll never make it. So you have two choices. Either you invest now and repent later, sell now, spend it on yourself and feel happy, or put in debt and you'll be a much happier person. We continue to be very strong on the mining sector. In the correction, we picked up a lot more stock and it's done reasonably well at this point of time. I think mining will remain a good stellar for India perspective. It's done pretty okay in this year, not so bad compared to with dividends and capital gain put together. You got a yield of about 18%, which is okay. I think mining will continue to be. Power sector, I think, should give phenomenally better returns as India realizes that you need to pay for power, both broadly speaking, at the end of the day. Government defense, you know, you can invest and they have done phenomenally well. We have been saying that, but invest with the peril that they can be the same way, they can go the same way as an IOC or BPCL. It's a government diktat to say you make 7.5%, 12% return. It's a tulip mania in a different world altogether. They don't make any money, they lose money, and they still got value. They, you know, they sell for 200 crores, they make a 200 crore loss. Does it need to be a genius to do that kind of stuff? Man, I tell you, I can find 100 other people who can sell for 200 and make a loss for 200. Ask the airlines, they do it very well, actually. So, you know, I would say just stay away for the time being. These are overhyped, overvalued. They still haven't gone down to earth. And earth is still far from them. They're still not there close to it.
Welcome back. You're still tuned into Trading Hour. Like you can see, we're just 310 points away on the Sensex from the all-time high. So we're tracking that very closely. The Nifty is absolutely at the flat line now, trending just above that 18,400 mark. And the place where we're seeing a little bit of the weakness today is coming through in the mid-cap index. So that is where we're seeing some weakness. It's around 0.3% in the red. But we're going to wind down on this edition of Trading Hour. As we do that, we're going to leave you with some important market opinion. This comes in from CLSA's Lawrence Belanco. Thank you all for watching and stay tuned because Halftime Report is up next.
We saw sentiment extremes into the October lows, as well as a number of market divergences that has led to the current rally that we've seen play out across global markets. And our work that we've done on our cycles into 2023 does suggest that we do overshoot the upside, and we think the S&P can trade above its 200-day moving average. and the Nifty on the back of that should trade to new all-time highs, and we get an upside target closer to the 20,100 area for the Nifty into the first quarter of next year. If we look at the Indian markets, through the first half of this year, we found that support around the 15,500 area, and we do think that's shifted up towards the 17,000 to 16,900 area. So that should be a sort of a key floor heading into the first quarter. One of the key setups that we're looking for into 2023 is a more significant top in that dollar index. So in the near term, there is support between 103 and 105. It's basically the 200-day, but also the 2017 and 2020 highs for the dollar index. And at some stage in the second quarter, we do think the dollar does get a rebound, but that rebound forms a lower high, and that's part of the topping pattern that we see for the dollar in 2023. And ultimately, towards the end of 2023, we think the dollar index is trading back towards 95. And that should put the Indian rupee back towards 75 towards year end of 2023. So our base case on the broader commodity side is that we think we're in the secular bull market, and we think that will continue to extend. And if we correct in our view of a dollar top, we think that dollar weakness will also support further re-rating on the commodity side. Recently, we've seen a breakout in gold that we think we can trade up to 1880 there. We've got longer term upside targets of 2150. As far as Brent goes, we think we're in a holding pattern basically between $88 and 123. And in the short term, you've got a base forming above that $88 to trade back towards 113 to 115. So, trading range is the worst case scenario we see for commodities, but within that space, a general uptrend we think continues to play out.